So, as an introduction to the second panel, which is about gaps in coverage of terrorism insurance, I will welcome Emma Karhan, who is Managing Director of Guy Carpenter UK. She has been with this broker for a long time, and she has worked with many pools, so she's very familiar with the terrorism. So, Emma, please.
Thank you, Pascal. Good morning. Firstly, I'd like to thank IFTRIP for asking me or giving me the opportunity to speak this morning. If I'm asked again, I might ask to have a separate billing. I think coming after that very interesting morning is a challenge to stand here and talk about insurance. Slightly less interesting, perhaps, or not interesting, but yeah, interesting. I won't try and hide it. I have some slides, and I understand an agenda for 15 minutes seems a little bit aggressive. Don't panic, it's basically a slide per point. But it's a really complex topic, not only when you go from the peril itself, but into insurance coverage. And there's lots of different facets and what ifs and buts, and so it's really just to give a little bit of structure to the next 15 minutes. From the outset, I do have a small caveat though, which is unsurprising, I'm sure, for many of you in the room coming from a broker. I'm not going to attempt to provide any of the answers, products, and thereby the silver bullet solution we heard about earlier. What I want to get out of the next 15 minutes is to look at the terrorism insurance gap slightly differently. The gap, or now we're starting to think of it more as a vacuum because somebody will fill it ultimately. And look at it slightly different so it provokes discussion that ultimately evolves to maybe some actions and some solutions and really some movement. As Jamie talked about, we need to the Winston Churchill quote, we need to evolve and we need to move quickly and we need to be agile. And I really think that that's something the industry has to start embracing pretty quickly. So to kick things off, I'm going to talk very quickly at some of the impacts. There have been some numbers thrown around. I've got lots more numbers, and really it's about the indirect impacts that are coming out of a terrorist event rather than the direct impacts. Next, then, we're going to have a quick look at the diverging gap between the economic and insured losses, why that's happening and why that might actually start getting worse as the two start to diverge, and put it down to a changing role in the government and also the new types of losses that are arising from our economy that's now being supported more by intangible assets than tangible assets. Are they covered? Can they get coverage? Should they be covered? Then I want to quickly look at the structures that we put in place 16 years ago. As Francois mentioned, I've been working with the pools for a long time in various stages of their development. And are they suitable for how things are moving? And I'm not saying that they should disappear, but how do we amend these or bring in new structures and new coverages to help us with the resilience that was talked about earlier? And we focus a lot on the non-damage BI gap, but there's another gap too, and this was touched on in the earlier session about the demand gap or also the supply gap. If people don't demand it, do we need to supply it? I'm going to finish my quick introduction with something that frames the discussion, I think, and it comes from the Borough Market incident and a couple of interviews that followed. And there was a baker who was interviewed on the second day, I think, after the event, and he estimated that he was going to lose about £80,000. And he was quoted as not having any terrorism coverage. Did he know he could get it? Was he advised to get it, more importantly? Was it accessible? Was it affordable for someone in this sort of SME world? And then on Saturday, even more scathingly, was the charcuterie owner who was quoted in the Financial Times. His losses were at about £35,000, lost sales, staff expenses and wasted stock. And he's incredibly jaded by the insurance industry. And I quote, "When you see the outpouring of generosity from the public for insurers to shut the door shows they don't have any corporate or social responsibility." And then finally, just a few sort of hypotheses or pontifications how we might move forward. So, it's a busy slide, a lot of numbers. And some of them might not be absolutely right, but this is what has been quoted in the press at various times. Out of this, I want to point out a few things while you sort of digest the colour. We talked about it earlier. Post-event, people have this mentality of, We will not be beaten, we will stand, we will come back from this. And economies do recover. There's no doubt about it. What happens is they recover more slowly than they would have otherwise happened. Built into this resilience is also a psychological barrier of acceptance, I guess, when we start talking about how we can build a resilient society, where people say, it's not going to happen to me. It's not really something that I'm exposed to. And whilst this attitude is somewhat admirable of the fatalism or the pragmatism of if it happens, it happens, it is probably one of the biggest challenges we have in this demand gap of people not realising that probably they should be buying terrorism insurance. And again, if there's no demand, should we worry about the supply of solutions? Because people sort of look at the numbers and they say, well, there wasn't much of a loss coming out of Borough Market, coming out of Paris. The numbers aren't that big. But what they don't understand is the indirect impacts. After 7/7 in London, they estimated there was about £750 million of lost tourism revenues. But this led to about a $2 billion indirect cost to the economy further on. Regulation's one way to do this. They did it with commercial insurance, mortgage insurance. So anyone who builds a commercial building has to take out commercial terrorism insurance for their mortgage. But we can't live our lives regulating people's behaviour. There are more long-term political impacts that meant government has to move or refocus funding to protection and security to help the economy recover. The US government, it is estimated, has spent $1.7 trillion since 2001 on increased security and defence. These increased costs of mitigating terrorism means funds are obviously diverted from other social interests, education, health, public services, a staggering $113 billion a year, roughly. So if you take a step further, with this money diverted to protection and security, who fills the gaps? Do they get filled? And to pontificate a little further, does it become a self-fulfilling prophecy? One of the causes for homegrown jihadists is disillusionment, failure of the social domestic infrastructure. If the money goes somewhere else, how does the socio-economic conditions that are a contributing factor to their disenchantment and their need to hit back improve? And then we've also touched upon the rising nationalism and incidences like Finsbury Park, and I was thinking about what Robert Muir would asked about the checking of driver's licences. That leads to social profiling. How does that help a social environment when you're looking at everyone who isn't Caucasian or looks like they might be wearing a hijab slightly differently? It only breeds more resentment. I want to draw your attention at this point to that little pie graph at the bottom, and I don't know if you can see the numbers terribly well, but it's a breakdown of the types of losses from 2001. And I come back to that because 2001, as we all know, was what really built this market, or gave rise to the pools and the need for the market solutions. Property damage from the World Trade Center, and I think this excludes the Pentagon, but from the World Trade Center constitutes only 30% of the total loss amount. With event cancellation, business interruption is approximately 43%. I'm not sure how far that BI estimate stretches, how far the causal link is pushed out, but it's probably the metro, the buildings around it, some of the small shops. It most definitely doesn't include the 18,000 SMEs that were displaced, disrupted or discontinued shortly after the event. So the point here is this is not a new problem. It was there and we saw it 15 years ago. If you look at the Bali bombings that happened in 2002 directly after, already we saw a different type of event happening, accessible, non-Islamic or anti-Islamic type targets where over 200 people died. Also again in 7/7, they went from these big mega shocks to the small events focused on creating fear. So when we look at this now, and we are all focused on non-damage BI, what else might be we missing? What else is out there, and how far should this causal link of terrorism to help bridge the gap between insured losses and economic losses stretch? So, the gap. We've all seen this picture, I'm sure, before, courtesy of our friends at Swiss Re who put this together. And we have the Total economic losses are made up of the insured and the uninsured being the vibrant yellow. The lines, the red line at the top is the total economic loss, 10-year average trend, and the blue is the insured losses. And here it's starting to diverge again, so this gap is getting bigger. So why? We can all have a surmise why, but it's also a gap that I don't think in this current environment of low growth and increasing government expenditure that can be afforded. We have two hypotheses to this, and they're interlinked. The first is the changing role of government that is in society, that is somewhat augmented and augmented by the evolution of this tangible asset-driven economy to the intangible. If we start with the changing role of government in society, and the best to do that, I think, is it's coming back to some of the points that were made this morning about people's benevolence and charity. Grenfell Tower, as an example, in about 2 days post Grenfell Tower, private citizens had donated up to £5 million automatically, like that, to help those that had been displaced and lost their homes. The government soon stepped in, but it's more about the speed at which this money was raised when they saw that there was a gap and that the government might not have been able to step in and help. So the gap remains an economic loss unless the government steps in, and as I mentioned, perhaps it can't. Similarly with the terrorism losses, charities, private citizens step in immediately to raise money for those directly impacted. So society almost becomes its own mutual, stepping into filling the gap where insurance is missing and the government is missing. This happens time and time again, and whilst the benevolence is commendable, how long can it last? Does it create a self-perpetuating assumption that charity will automatically bridge that gap or fill that vacuum where insurance or the government fails? Then becomes the even more provoking question, whilst this happens, where is the need for the government or the industry to try and find solutions? Where does the need for people to demand a solution? Ultimately, this could reduce, I very carefully say this, the future relevance of the industry in helping a society build that resilience and recover, because part of the resilience is the financial way we step back up and we show that the world can go on. So the second part of the theory, and before I move on, this is where I see the industry, public, the pools, these private-public partnerships are so important because they are bringing it together so that we have a combined approach. And every country will be different, but the theory should still be the same. So the second part of the theory, or the hypotheses and the other link, is that this gap is exacerbated by the fact that economies are increasingly driven now and supported by intangible assets. 40 years ago, intangible assets represented only 17% of the value of the largest listed American companies in the S&P 500. Today, it's close to 84%. That's a five-fold increase in a little over a generation. The service sector in the UK employs 85% of the UK workers, and Paris tourism employs 2 million people and accounts for 7% of the French economic activity. It's kind of extraordinary how far a terrorism event could affect an economy. We also now have the Internet of Things. We have companies that rely on intangible assets, their income is derived from the intangibles, and then we move into the whole cyber terrorism, which I'm not going to touch here. But what happens in the event that all these services are disrupted? The vendors in Paris and Borough Market who were shut down for a week. For some of these businesses, it's also a simple cash flow challenge. I come back to the baker having to write off the £80,000, and then he was shut for a week. He has fixed costs he needs to cover, wages to pay, and this is before we start calculating the future impact of loss of attraction. What happens to the restaurants, hotels that buy his produce? People have short memories and are not that tolerant when buying services. 1 or 2 bad reviews on TripAdvisor can mean the death knell to a small business, or simply the risk-adverse behaviour that arises from the psychological impact of a terrorist event. They go out less, they spend less, they use services less, and they travel less. With this intangible economy, of course, is the increasing globalisation of business and economies and the speed in which services breach borders and continents, which then presents an issue of CBI. And that's something that we've struggled with as an industry for years and haven't found something that is suitable as a solution. But now with the Internet of Things, we are connected and it presents even more of an issue, a real-world issue that the insurance industry is failing to respond to proactively, as is the perception, and for many perception is truth, and perhaps is risking its irrelevancy from the inactivity. So, almost through the slides. When 9/11 happened, we had multiple lines of business that were impacted by one event. However, we focused on the direct property losses and the BI that came from these losses as the main risk to balance sheets. So we as an industry looked at a solution and taking the property damage element, which theoretically had the potential to kill off a balance sheet, we moved to protecting those risks with the private-public solutions, or the public industry, I'd refer to them, solutions. Now we move forward 16 years, and we have a peril that doesn't behave anything like it did 16 years ago, creating those big shocks. And I'm not saying it never will again, absolutely not. But we have to think of it as having a second life. It's about casualties, plus the BI and the CBI losses that have an increasing impact. In 2015, property damage was estimated to be only 2% of the economic impact coming out of terrorism events. The GDP losses were estimated at 23%. Kind of big, staggering numbers that we need to understand. So I've mentioned them before, and I think a big sector that is missed by the industry is the SME market. And to put this into perspective as how important ultimately they are to an economy. First of all, the economic loss that came out of Brussels, they estimate, or the Brussels attacks, they estimate 350 million euros came from CBI and loss of attraction. The SME sector, which they define, the Edinburgh Group defined as 5 to 250 employees, have produced statistics that show that SMEs globally account for 95% of all enterprises and 60% of private sector employment. In the EU, in 2012, they made up 99.8% of all enterprises, 67% of all workers, and contributed 58% of the gross value added. 25% of SMEs in the EU are also exporters. And so now you have the EU, and they are starting to look at terrorism as an entirety, and you have the criminalisation of activity of aiding and abetting terrorist activities. What's next on the agenda for them to look at? What happens with a failure to protect or a duty of care? When do we start addressing that issue where, as we were talking about corporate citizens and looking after the people that work for us, something fails where people are trapped? We talked about Grenfell, Manchester. Is there a third-party liability there for companies? And I'm not suggesting there is. I don't know if there is. I don't know if there should be. But these are the sort of questions we should be asking ourselves. A hotel without adequate security measures, or a public space where evacuation procedures failed and people died or are seriously injured, who takes responsibility for that? Should someone take responsibility for it? Most of the medical expenses in these instances are covered by these stretched national health systems. But what happens when it's serious injury? Long-term care is required. Public pressure can also move legislation very quickly, as we're seeing currently in the UK. And so it is something that we should be actively thinking about and using what we can to lobby some of the changes that we feel we might need. 9/11. 9/11 was undoubtedly the biggest terrorism event that we have had. And when you look at it in the context of other big catastrophes, or the Nat Cats, as we call them, it sits there very comfortably in that list. But if you look, and it was a catastrophic event, but if you look to the right, where we have not all of them, but some of the more headline events of the last 15 years, we can see we have a frequency issue. The nine events on that right-hand side have resulted in only about 12% of the total deaths from 9/11 and nowhere even close to the property damage. We have small events that are conducted by the one or two people, and they are still by definition a catastrophe due to the resulting deaths and the psychological impact they have on cities and populations locally and further afield. And instead of the iconic losses and with massive economic disruption that Al-Qaeda was looking to create, we have an intent from the so-called Islamic State to create fear and to simply kill. I think the important thing here is we need to think about a suite of products. It's not just about these big iconic losses, and there is no one-size-fits all. We need as an industry to get used to moving and adapting as things change and to do it faster. What we've done in the past is not necessarily the only thing we should be doing going forward. Another couple of issues have come up with the recent events, and it comes back to how we look at terrorism and how we as an industry define terrorism. None of the perpetrators had any explicit direction from ISIL or an affiliate. They were inspired. Half of all plots with an ISIL connection have been conducted by people who have had no direct contact with IS, but we define it often as a member of. Is this a gap in our approach to defining? Is there a smart lawyer out there that could actually start to cause a few problems? Maybe they wouldn't dare, but you never know. And the terrorism definitions vary from country to country, from program to program, which doesn't seem like a big deal. Terrorism is terrorism, and most of them need to be ratified by a government. But let's put it in context of Brussels and Paris. We had an event in Paris. 40% of Brussels hotels had cancellations on account of the lockdown from Paris. It was classified as one event. It occurred theoretically, well, not theoretically, but it was planned in one country, executed in another, fell under two different government jurisdictions, which both have two different protocol around declarations of a terrorist attack. You had one network in Belgium and in France. What about the cars? We touched on it earlier. And the companies that are operating cross-border, how they're impacted by this lack of, I guess, consistency in some ways. Again, maybe not everything should be covered, but we need to start recognising what we should be covering to help economically find a viable way to close this gap and also staying relevant. Last slide. It's a complicated challenge, and I don't think that any one person, company, stakeholder, expert has the answer or the solution. This needs to be a collective approach. Furthermore, the availability of some coverage does not mean that there is a market and thus no gap. Are they addressing the right gap? Is it accessible? Is it affordable? Is it addressing the right people that really are vulnerable in the event of a terrorism attack? So I come back to the collective approach and stimulating, I guess, demand, the demand gap. One way to simply create demand would be to drive the product evolution, is to create fear. However, that's the last thing we want to do. We want to educate but not create the fear that then leads to the risk-averse behaviour. Many of the insureds that probably need the coverage are likely not to be sophisticated enough to understand that they need it, probably not able to afford it, some of these specialised coverages, and for many of them, again, it's just this cash flow issue they need to get through a short term or medium term. And I don't mean to suggest that we are a bit of benevolent industry either. Everyone here who carries risk also needs to make money. It's about finding the balance. Where does it make sense for the public industry partnerships to work together, and where does it make sense for the industry to go it alone? Over the last 16 years, the market has evolved dramatically, and there are many people with an increasing understanding of how to cover this peril and the issues that surround it. And this is where the public and industry partnerships are so important. This is where I see the pool community to be the catalysts to find ways to close the gap, to drive the evolution, bring the industry and the public sectors together to find solutions that allow communities and economies to recover more quickly and reduce the reliance on the public purse, while also allowing an element of profit potential for the industry. If someone else, i.e. the private sector, the private individuals, steps up to cover the gap, the uncovered losses, is there really a gap left? And if there is no longer a gap because vehicles like charities step in, then do we need to find other insurance coverages? Do we just rely going forward on the goodness of others? How long will it last? Will something evolve to take its place, some sort of ironically disruptor? I can almost imagine an Apple or an Amazon building some mechanism to establish their charitable funds, allowing them to improve their social responsibility profile in this world of rising populism. And most likely it would be a mechanism which ironically would be tax deductible. Or even the further corporatisation of the Red Cross or other such charities who are asked to step in and raise money. This also helps them build their own brand, and it fills this vacuum of coverage gap. And if this is the case, does the industry remain relevant? Lastly, coming back to the scathing commentary by the charcuterie, does the industry care? Are they making too much money to even bother? The industry needs to be a little braver. They need to test coverages, learn by doing. Not one solution is the answer or a complete response, and they have to take some risks, get some data points, move forward accepting that there will be losses and losses of profits and mistakes along the way. What we can't afford to do is to sit, to wait and to watch. Industry-public partnerships are not driven by a profit motive and should be the catalyst for finding insurance solutions or structures that build resilience more quickly to work more effectively against the objectives of terrorism. Thank you very much for your attention.